Okay, so we are just about 7 minutes off the TOE NFP here on the markets, and it's pretty simple. There's a very bullish and a very bearish case setting a stall out for this. If we get a beat on the headline and we get a beat, which is the headline set to come out between 195 and 200,000. If we get a beat on the headline and we get a beat on the wages, 4 point set to come in year on year, 4.7. 4.7 and the prior was 5% on the year on year. And that's also if we get these two, that's incredibly bearish because it's going to signal to the Fed that they actually have to be even more aggressive, all right, to put the ice on this economy to fight inflation. The very bullish scenario here is we get a miss on the jobs numbers at 195 or 200,000, and we get essentially a decreasing below on the year on year below the 4.7. All right, that's incredibly bullish. Okay, so that's really, sorry, I'll just come back to these charts here. And yeah, so really that's kind of what, I'm looking at here for this. Now, if we get a mixture, if the headline is a beat and the wages are a miss, then I'm just going to really step back and see what the market does. But I think in the first 15 minutes you're gonna see some very, very big reactions. You're probably going to see fake outs here for the first 15 minutes, and then it's going to kind of bed in. But initially, yeah, that's the bullish and the bearish scenario. So bullish is that we get a miss on the year on year 4.7 wages, and we get a miss on the headline. All right, I think the market's then going to price in for this FOMC and the Fed to actually then turn dovish as they look towards the December meeting, keeping in mind that we have quite a few CPI readings between now and then to factor in. But it is the market, I think we've seen it price in ideas of the pivot, very strongly. All right. So, okay, we're going to leave it there. All right. Best of luck for this FOMC.